Good day. I'm delighted to welcome you to this FS Club event on Shaping Taiwan into Asia's Asset Management Center. Unlike many of our webinars, I decided to fly out to Taipei to conduct this jointly here. And I'm really delighted to be accompanied here by Dr. Cao and by Mr. Phil Tong. And we're going to be talking about Shaping Taiwan, but we're also joined by Chris Carterone, who's dialing in from Italy, but is normally based out here in Taipei. Now, one of the exciting things about coming out to Asia is always seeing the immense enthusiasm, the immense productivity, the immense change. I haven't been to Taiwan for many years, and I have been extremely impressed over the last 3 days with many of the positive changes that I have seen, and the enthusiasm here at what is called FinTech Taipei, but obviously ranges far wider than just FinTech. We've been here as well as with the Taiwan Academy for Banking and Finance, which has been, they've been absolutely fantastic hosts at getting us around and producing some discussions. But you're not here to hear, you're here to hear from them. And what we've done is we've divided this really into 3 parts. Mr. Tong is going to chat very much about the asset management regulatory space and what Taiwan is trying to achieve. Dr. Cao is going to talk about capacity building and how we're looking at training and development in people. And then finally, Mr. Calderon will be giving us out of a foreign investor, what is it really like operating in that market? So with no further ado, Mr. Tong, may I ask you to set the scene, please?
Sure.
Thank you.
Sure. Okay. Thank you, Michael. Good afternoon to our audience in Taipei, and good morning to our friend joining us online from London. Ladies and gentlemen, it's a great pleasure to be with you at this webinar today. I'm Phil Tong, Director General of Banking Bureau at the Financial Supervisory Commission. I would like to begin with expressing my sincere appreciation to the Taiwan Academy of Banking and Finance and Yi-Cheng for co-hosting the International Forum on Asset Management. Just a few weeks ago, FSC had the opportunity to visit London for an in-person forum to introduce the Asia Asset Management Center initiative. The event helped many international players to see Taiwan's growing strengths and commitment in the financial sector. Today, through this online section, we are pleased to continue that dialogue to showcase Taiwan's unique advantage, highlight our last policy initiative, and most importantly, to strengthen global partnership by inviting all of you to explore the exciting opportunity with Taiwan's financial market. Today, I will begin with a brief overview of Taiwan's economy and the financial system, and then highlight our unique strengths and growth opportunity. Next, I will share our policy roadmap toward building Asia's Asset Management Center, including key initiatives such as the Kaohsiung Pilot Zone. Finally, I will introduce the Asia Asset Management Center Promotion Office and its one-stop consultation service, including online and toll-free contact channel. Let me begin with a quick introduction of the Financial Supervisory Commission. The Financial Supervisory Commission in Taiwan is a single regulator for the banking, insurance, and security sector. We are committed to financial stability, consumer and investors protection, and market development. Together with the central bank, which manage monetary and foreign exchange policies, and the Central Deposit Insurance Corporation, which oversees deposit insurance, we formed a robust 3-pillar financial safety net to safeguard financial stability. We also maintain representative office in New York and London as a platform for international dialogue and cooperation. Taiwan's financial system is built on a strong economy foundation. Our financial sector contributes 6.5% to GDP. inflation rate low at around 1.5%, and unemployment stable at 3.3%. International credit rating agency rate Taiwan highly at AA3 by Moody's and AA+ by S&P. In banking, the non-performing loan ratio is only 0.16%, with capital adequacy rate at 15.7%. Taiwan is also highly digitalized in retail finance, where non-cash payments account for 96% of all transactions, compared to the global average of 64%. In insurance, penetration exceeded 11% of GDP, ranking 6th worldwide. And in security, Taiwan's market capitalization reached $2.3 trillion, ranking 8th globally. And in terms of corporate governance, based on the Asia Corporate Governance Association 2023 rankings, Taiwan ranked 3rd place among 12 markets. Australia comes in 1st, Japan 2nd. Together, this indicator shows a system that is stable, resilient, and open for growth. Why Taiwan? Let me highlight 4 advantages. First, strong economic growth and a competitive industry base. Led by global champions like TSMC, Taiwan is forecasted to grow 2.9% in 2025, faster in Singapore, Japan, Hong Kong, and Korea. Second, abundant wealth. Deposit reached $2 trillion last year, 6 times higher than 3 decades ago. Taiwan also holds the 6th largest foreign exchange reserve globally. Third, Taiwan's capital markets are highly attractive. Our stock market capitalization has nearly tripled over the past decades, showing both growth potential and dips. Fourth, professional and competitive talent. Taiwan ranks 3rd in Asia Pacific on Global Talent Competitiveness Index, reflecting the strength of our professional workforce. Beyond macroeconomic stability, Taiwan's wealth management market is booming. Net financial assets per capita reached $162,000 in 2023, ranking 2nd in Asia and 5th worldwide, a strong wealth foundation for financial growth. Taiwan's high net worth population has grown by 60% in just 4 years, with total wealth projected exceeded $1.8 trillion by 2025. Most high net worth individuals are 1st or 2nd generation enterprises in their 5th and 6th, making succession plans, private banking, family office, and cross-border wealth solution top priority. Demand is future supported by Taiwan's 1.73 million small and medium enterprises, which continue to drive opportunity for wealth management, business succession, and the next generation financial planning. Building on the advantage, our goal is clear: to make Taiwan's Asia's premier asset management hub by 2030. To achieve this, we will roll out a series of initiatives. First, we are enhancing our asset management framework through regulatory reform and products innovation, such as ETFs. Second, we are channeling capital into a real economy, directing more investment into industry, infrastructure, and innovation that can strengthen Taiwan's long-term growth. Third, we are boosting our wealth management capacity, expanding private banking, encourage family offices, and strengthen offshore wealth services. To meet these needs, of fast-growing high net worth population. And we are doing all this with a clear communication to inclusion and sustainable finance, integrating ESG principles and responsible investments. A key milestone in this journey is that we established the Kaohsiung pilot zone just 3 months. This zone represents a new financial operation model for Taiwan, allowing innovation cross-border asset management trial. As of now, 38 pilot programs have been launched with 33 financial institutions already participating. By 2030, we target $1 trillion in assets under management. The number of banks eligible to serve high net worth clients will more than double, from 12 in 2024 to 28 by 2030. This milestone demonstrates Taiwan's determination and capacity to build a world-class asset management ecosystem. This proves Taiwan can move fast, collaborate effectively, and create opportunity for international players. To ensure effective policy implementation and provide better support for market participants, the Taiwan Stock Exchange established the Asia Asset Management Center Promotion Office. Established this office located in 11th floor of Taipei 101, right in the heart of the financial district. The office serves as a direct link between global financial institution and Taiwan's financial authority under the FSC. It brings together officials from the banking, insurance, and security bureaus, along with experts from the Taiwan Stock Exchange, to offer one-stop consultation services, whether in person, by phone, or online, to ensure response and coordinated communication. Through this channel, we help connect regulators in industry, provide practical guidance, and deliver timely and reliable support for global asset managers exploring opportunity in Taiwan. In closing, Taiwan had a resilient economy, abundant wealth, a robust financial system, and a clear policy vision. We are building an ecosystem that welcomes global investors, financial institutions, and talent. Today marks the final events of Taiwan Week, a week-long series dedicated to advancing our vision of becoming Asia Asset Management Center. Over the past few days, we have gathered global asset managers, exchanged institutional investors, and corporations to share insights and explore cooperations. These events showcase Taiwan's strengths in open capital market, product innovation, fintech, sustainable finance, while deepening international dialogue and partnership. We believe this is only the beginning of an exciting journey. Together, we can shape the future of Taiwan as an asset management center in Asia and make Taiwan shine on the global stage once again. Thank you very much.
Well, thank you very much, Mr. Tong. That was really great. And you outlined much of this in London last month, but what's been fantastic this week has been seeing the evidence on the ground, and I genuinely appreciate it. And I was wondering, Dr. Cao, might you, as president of the Taiwan Academy of Banking and Finance, like to talk about how you're building capacity, particularly in the human capital area?
And so And thanks, Mike. Before my presentation, we have our colleague, we have some discussion that in the beginning for this presentation, we want to provide more macroeconomic background about the Taiwan situation right now. And then later on, we were talking about our strategy to how to train our talent in Taiwan and also attack international talent. So I will spend like 10 minutes to this presentation to talk about a macroeconomic background. So first, we see the market opportunity in Taiwan's financial factor. First, we were talking about the economic growth. So you can see that the INF economic growth, their prediction that in the start of the 1980s, our GDP level is similar to world average, but right now, of course, our performance is good compared to other Asian markets. And then we see what's the unique rule in Taiwan. First, we see that when you see the picture, you see that the export volume after 1980s is always larger than the import volume, which is quite unique in Asia and even in many global countries. So that is the unique performance of the Taiwan in the past 5 decades. And when we see the export data and the import data, we separate those products into high-tech products and the low-tech products. And golden line present for high-tech products. And we see the left-hand side is the export. So we see, especially after 2010, our export focus on the high-tech products. And in the beginning, you can imagine that we provide a chip for smartphone like iPhone. And in recently, we provide chips for the AI computing demand. So those are high-tech products. And we also see that in the right-hand side, we have the low-tech product, which is import. But the differences between the export and the import is our contribution. So we add a value between export and import. So that is the value we added in the last in the last 5 decades. And so you can see our unique rule in Asia is that in the past 2 decades, our new company which have IPO activities in Taiwan, half of them are tech companies. So it is not surprising because of our macro data expo have shown that. So the result is that we accumulate such a trade balance, and those trade balance in recent years is come from North America, and which is I just described the AI demand. And in Asia, we also have many production line in Asia, so we export those material to Asia, and then the final market may be in North America and Europe. So when we see those number and we use a very simple macroeconomic identity to prove that the result will be, when we see the result, the macroeconomic equation showing that the X is the export and the M is the import. So the export minus import is the trade balance, and C is the consumption, and I is the investment, and G is the government spending. So when we define the saving as the income of Y minus the consumption and government spending, it must be the case that our saving minus investment is equal to our trade surplus. And we can see that we accumulate those trade surplus for more than 40 years. And then the result must be the case that our saving is larger than our investment. That it must be the case according to this mathematical formula. identity. So the result is that after 1976, we see that our saving rate is quite high, and after COVID-19, we see another high level that our saving rate is about 40% of our GDP. So, which I think that might be the highest in the world. And the most important thing is that it is persistent over the years. So, the result is that we have the return is lower when we take the 5-year government bond yield and the 5-year corporate bond yield in comparison. We can see that after 2000, we see the bond yield rate, whether in government or corporate bond, is lower than 2%. So our investor in Taiwan, we demand for return. So many investment will put in the stock market. And you see that Taiwan, our company in stock market, also have dividend payout ratio, which is more than 60%, which is very high in Asian market. So which means that we invest stock market to get a return, and the return in bond market is quite low because of such a saving guard in Taiwan. And when we see the inflation rate in Taiwan, we see the inflation rate is about 2% over the years. So 2% means that when we put a very simple equation that nominal interest rate is equal to real interest rate and the expected inflation. So we can assume that like next year our inflation expectation is about 2%, and our nominal interest rate is about 2%, which means that we have the 0% real interest rate in the past 2 decades. So those 0% real interest rate is not sustainable in the long run. So the ways to solve this problem is that we can have 3 channels. One is to more private consumption, and the second is our government need to increase their expenditure, and I can also give you the statistic is that our government debt is quite low. It's quite low. It's below 40% of the GDP. So we still have the space that our government can increase the expenditure. And the third way is to import more goods and services. So services also include financial services. So within those background, that is why our government, our FSC, proposed those new policy, and we believe our stable macroeconomic environment can attract foreign company to invest in Taiwan. So the data shows that is the latest survey data from UBS. Right now, we still have home buyers in Asia. So when we see the family office in Asia, like in Singapore, in Hong Kong, they on average like more than 25% their family office will increase their investment in Taiwan. But in US, in Europe, and in UK, it's about 7%, and in Switzerland is around 0%. So, which means that home buyers here is that family office or investor in Asia, they know Taiwan have many invest opportunity, especially like semiconductor related field. But in Europe and North America, we can attract more investor in Taiwan. They want to invest here. So our conclusion is that in TABF, we know that talking about the service, we need to improve the productivity. So wage is equal to the services. So our strategy right now is that in Taiwan, we don't have enough talent pool because of population decline. And we also face challenge from tech company. So our strategy is that in TABF, we now this year we try to provide programs for university students, and then we have teacher from industry and we have students from university. And this year we have a new project which bring together of our 5 universities in Taiwan. They are top university, and 2 of them are private, and 5 of them are top public university in Taiwan. So we hope that our young talent can know that those market practice and know TABF. So we try to expanding the talent pool. That is one strategy. And the other strategy is like when we are in UK, actually it is the case that we bring about 32 members from banks in Taiwan. We visited UK, and next year we also want to visit different countries. Like we also visited Singapore. We want to bring our talent in Taiwan to have more international exposure experience. But eventually, we have to educate our domestic talent. So later on in the Q&A section, I will talking about more strategy that we have in TABF. And so far, my brief introduction of Taiwan macroeconomic background is here. Thank you.
Thank you so very much for that. That's really exciting, Dr. Cao, and very helpful and a good kickoff to our discussion. It is extremely impressive, the sheer quantity of savings. In fact, today I picked up that the cumulative effect is something over $16 trillion of savings accumulated here. So we'll come back to that, I'm sure. But you know, you would expect that the regulator and the Banking and Finance Academy to say that, come on in, the water is fine. But Chris, you're actually taking the effort of dialing in from Italy. You're so committed to Taipei and Taiwan. What's it like at Triorian to somebody who is really here on the ground and has bought effectively the sales pitch? What's it really like?
Thank you very much. I hope everybody can hear me. Michael, thanks very much, and also for the Taiwan Academy Banking and Finance and Yi-Cheng for inviting me to talk about this. You're right. I've been here many years, and what I'll be saying is actually complementary to what Director General Tong and Dr. Gao just said. We see the same thing, and we think from an investor standpoint, there's a lot of opportunities. So I'll be talking a little bit about the opportunities and strategy for Taiwan's asset management and high net worth wealth management markets. Next slide, please. So just to give you a quick background so you know, because every investor and every fund is different. I'm the president of a single family office here in Taiwan, a foreign family office investing in Taiwan's equities and bond market, so mostly the secondary market since 2010. And our goal is capital preservation. Okay, it's not profit maximization. We like to find where the risk is and make sure that we avoid that. And Taiwan's a great market for that. I'm also with the AmCham Private Equity Committee. I'm a co-founder of the Italian Chamber of Commerce in Taipei, more internationalization for Taiwan. And I've been here 30 years, last 20 in the investment field, and last 10 before that in the tech industry. So kind of in the key industries we're talking about here. Next slide, please. Okay, why Taiwan? I guess that's one question we can get out of the way. Well, as we just heard, there's a lot of built-in factors which make it easy for investors to, especially in the secondary market, to like Taiwan. Limited volatility, up and down 10% limits to how much a share price can appreciate or depreciate in any one session. The high dividend yields, like Dr. Gao was talking about, and Director General Tong were talking about, the people plow that back into the market to support the share prices, good for the investors' ears. The National Stabilization Fund, which may be doubling actually, there's a measure to do that, supports the market during times of volatility, and we're seeing a lot of volatility globally. It's a tech-driven market, okay, so you're allowed to get in on the cutting edge of industries in the future. And there's over 2,000 companies listed in Taiwan, okay, and the various exchanges. TSMC, for example, has 600 companies on its own supply chain, which is the size of Singapore. Okay, so Taiwan's a very, very diversified market, lots of companies to pick, and there's an increasing number of ETFs. Next slide, please. Okay, just this week, we saw the news. As of September end 2025, a lot of liquidity in the Taiwan market. The TWSE, the main board in the OTC market Taipei exchange, it hit $90 trillion NT, around 2.93 trillion US dollars in terms of market value, making it the 8th largest in the world. It's not a small player. And the semiconductor industry, which is what everybody wants to get into, is 48% of the market here, 48% of total market cap. So that's a lot of reasons for wanting to be investing in Taiwan. Next slide, please. Well, let's take a look back at the beginning of this year. January 20th, Donald Trump's coming in. The world looks open for investors. Not a problem. Now go to the next slide, please. Okay. After he comes in, well, the world's kind of balkanized, hasn't it? Okay. It makes it very difficult for investors to want to look for new opportunities because they have to think about many different factors when they do that. We're seeing tariffs. We're seeing agreements trying to block people out of areas, things like that. So Taiwan's trying to recognize that and open their markets to make sure it's easier for investors to come in. Next slide, please. So there's advantages, I'd say, as an investor look at, and landscape itself provides some advantages. Taiwan has, as we've seen, a wide array of industries, not just tech, but also traditional industries. Firms at the higher end of supply chain, not the low end, so they're not going to be impacted by, let's say, volatility as much in terms of, let's say, the tariffs. And also for tech Taiwan, okay, it's arguably, I'd say, one of the 2 key markets in the world because the United States is number 1 because you have the NASDAQ and you have Silicon Valley. NASDAQ for the public markets and secondary markets, Silicon Valley for venture capital. Taiwan, I think, is equally important, as we can see with all the companies here involved in tech and AI. Next slide, please. So also, too, the supply chains and firms are led by some semiconductors, now servers and AI. They're undergoing a wave of global expansion to meet their clients' needs and the market needs. Okay, so opportunities for investors to get involved as they expand. And as we heard, a lot of them are SME, small, medium-sized enterprises, and also family-run businesses. So they're looking for talent, they're looking for involvement to get bigger. And then it creates both opportunities and some challenges too. And remember, in the field of investment, challenges sometimes are a good thing because it gives you an opportunity to provide the funds to do that, to meet that challenge. Go to the next slide. Okay, next slide, please. Okay, so if you look at just the, let's say, the tech landscape, go back 1 slide, please. Okay, if you talk about Taiwan, AI, it's a whole lot more. On the left, you see the sectors, semiconductors, servers, end devices, power supply. Then you have the industry itself has a lot of little subsectors in there that Taiwan plays critical roles in. And then you have the firms that are supporting it. And alliance company is not just one company dominating all the industry. Okay, there's many firms that you give diversification to. Now they're supporting the development of AI and they're benefiting from AI. And then they're going to support the global supply chains. And if you look on the bottom, see there's a lot of other industries, low Earth orbit satellites, auto parts, traditionals, financial, shipping, biotechnology, diversified market that's going to be working in this new AI-driven world and also supporting it and benefiting from it. Next slide, please. So I show these next 2 slides because people like them. It seems to resonate with them. Remember, in the past, in history, societies built castles for a reason. The world outside the kingdom was very, very scary. It's a very dangerous place where they built walls around themselves. We're kind of in that, I think we're in that era right now, okay? And we're seeing a lot of countries build those walls up through tariffs and through other ways. Go to the next slide, please. The seas, though, they're going to be rough for the next couple of years. They're going to be very choppy waters. And no matter if you're on a very luxurious yacht, okay, sailing through the world, through the global markets, if you're on a small yacht, even a big one sometimes, it's going to be risky if you try to do it alone. So you're going to need to work with people and you're going to need to work with other markets, especially financial centers around the world. Go to the next slide, please. So if Taiwan, we look at Taiwan, what are they doing and what does that provide for investors? Well, you've got from the left, we have the technology fields, the semiconductors they're focused on, artificial intelligence servers, robotics, cybersecurity and defense, innovation, all these areas that the world's investors want to get involved in. Then you look at power generation, renewable energy. Remember, Taiwan's resource poor. And they're also getting into technology industries which use a lot of resources, especially electricity. So they've been focused on renewable energy. They've been focused on energy storage. They've been focused on waste management from the semiconductor industry, and also sustainability, which provides opportunities and support for technology. Then you have, as we've heard today, financial investment reforms coming at the right time. Asset management, family office development, digital currencies are going to provide more opportunities, fintech, and then you got M&A, which is providing other opportunities for, let's say, private equity. And then you have the societal and political system in Taiwan, which benefits and supports all this. Democratic open society, talent development and education, like we heard from Dr. Gao, and generational transformation. The first generation is retiring, the next generation is coming in. And then underneath that, you have the current government talking about democratic supply chains. Very, very important. It allows everybody to get involved, and you know transparently what's going to happen. Next slide, please. So the new rules we just saw this week again from the TWSC, they're easing the rules for foreign investment to give foreign investors a greater ability to work with the companies here. Listed foreign firms that have a greater than 30% stake, they'll be exempted from having to have a board of directors, which is more than half Taiwan nationals. So more investment and more opportunities for management, okay, from foreign firms. And they will still be able to count on the expertise here in Taiwan by having at least 2 Taiwan nationals as independent board members. Go to the next slide, please. And for the mutual funds, okay, they'll be allowed to use the same requirements to buy stocks on the Taiwan Innovative Board, the next generation of companies. Okay, so they'll be allowed to buy those and also invest in those. Go to the next slide, please. Taiwan's advantages, well, we have the companies are going to be involved in the right industries, and the TWSC, the Town Stock Exchange, is going to support them by providing assistance to them. Semiconductors, national defense, AI, green energy. You see drones, aviation, many, many sectors, the key sectors for the future. Taiwan's not just going to try to drive it for the government. They're going to have the investors, they're going to have the companies themselves, and they're also going to have the support from the government to make sure it works. Next slide, please. So we saw the Asset Management Center in Kaohsiung, which is a very major part of the asset management future. AmCham, we've been talking about trying to partner, and we've been discussing with the government ideas to make sure it's a single family office or multi-family office market, and also create more dialogue to create a long-term development for the market. Next slide, please. And my last slide here is, remember, we're trying to connect Taiwan and with the rest of the world and have the rest of the world connect with Taiwan. Taiwan's financial reforms and technology leadership will help it connect with global financial centers such as New York, London, Milan, Switzerland, Luxembourg. And also at the same time in Asia, because Taiwan's getting involved, it's reducing some of the pressure that's existing on some of these already existing financial centers such as Singapore, Hong Kong, which are undergoing geopolitical changes. ZN Group provides a great global financial center index. It's great to read it, and it's showing that Taiwan will be one of them in the future. So it's a very exciting time for us. We've been here many years, and I think when we look at this, we're seeing all the right things being done by the government. As we get more investors to create this critical mass, we think there's going to be some real opportunities when we talk about semiconductors, AI, talent development, and so on. Thank you very much. I think the next slide will just say thank you, and I'm looking forward to the Q&A period.
Fantastic, and thank you very much, Chris. Well, in Xian's indices, Taiwan ranks 55th, which is quite an improvement recently from the 70s. It's also ranked 30th in the FinTech Index, and on the Smart Centers Index, which looks at technological deployment, it's ranked 32. So these are all very powerful numbers for a small nation. We tend to look at 5 things in our indices. Infrastructure, tick, I can vouch for a modern city. Reputation, in fact, it's trendy, whether you're ranging from bubble tea to all sorts of other exciting things that are out here. The business environment, we've got economic growth, which was going through there, very, very strong over a very long period. A huge savings ratio, over 40%. Human capital, excellent, but also open to overseas talent. And then we move into financial sector development with a great wealth management sector, the ETFs, the ISAs, the Taiwanese ISAs, Taiwan and Japan cross-border ETFs. I've seen a lot of interest in the development here of digital assets. So all that is going wrong, and very much opening as well to foreigners having control. So these are all extraordinarily positive things. And one of the things I have noticed in particular, has been the great level of cooperation, not too close, but between the regulator and the industry itself. So this may be a strange question to begin with, because Chris ended with looking forward and what the chambers and others are doing in terms of lobbying for future growth. Phil, what to you are the next milestones on Taiwan's Asian Asset Management Center initiative beyond 2025? What can we expect in the short to medium term, the next 2 to 5 years?
Thank you, Mike. The Financial Supervisory Commission launched the Asian Asset Management Center initiative to advance the opening and the integration of high net worth services, cross-border financial activities, and diversify investment products. So by August 2028, we see the beautiful results. We already delivered 36 reforms exceeding our initial global. The big milestone this year, the establishment of the Kaohsiung Pilot Zone, just Chris mentioned about that, which the most important meaning is that the regulator, we cut the red tape and allow 38 new trial business with real incentives. So since open application in this April, 17 banks have already joined, including major international players such as HSBC, UBS, BNP Paribas. And in addition, 7 global asset managers have established regional hub in Taiwan. And recently, we know that the JP Morgan, they have shown that they strong interest in joining in the Kaohsiung Pilot Zone. So looking beyond 2028, we focused will be expanding our cross-border financial services. We try to building one-stop OAMU. The idea of OAMU means offshore asset management platform, and strengthening the TISA system. So in nutshell, the Asia Asset Management Center initiative is about making Taiwan's market broader, more connected, and more visible globally.
Well, that's fantastic, Phil, because this concept of a one-stop shop is crucial. There's all these assets needing to be managed. We've got to bring that talent and expertise in. And it's great to see that you recognize it and are developing it. If I can, Dr. Cao, Yi-Cheng, all this is going to produce challenges. We're going to want a deep pool of asset managers and expertise, ranging from accountants to legal to actuaries to compliance. We're going to need a lot of investment analysis. What is being done to ensure that the necessary talent is available in finance, technology, and particularly for a country that has been open but is opening further cross-border work?
Yeah, thank you for this question. And as I just mentioned, that for young generation, we try to have some program to attract them. But now for our bankers, they are in the industry. We find that in the beginning, we try to bring some lecturers from UK, from US. But I have to say, if we provide the same courses, one is in English, one is in Mandarin, and in Mandarin many people want to try to attend those courses provided by us. But in English, even the tuition fee is supported by our bankers association. Typically, we cannot find enough workforce to participate in those programs. And in practice, so we see the problem here. Our next generation, their international, their English is better than older generation. Not older generation is the workers right now. So we use different approach. One is that we know we have to learn international experience. So one approach we use is that we find Singapore as our partner. Like this year, we find the WNI, stands for Wealth Management Institute in Singapore, and they can find some good lecturer, good teachers who can use Mandarin as the illustration, as the medium of illustration. So we invite them into Taiwan. That is one approach. So those experience in Singapore that we can enhance our local talent ability. And the other approach is that in the last 20 years, actually we have many Taiwanese talent who has working experience in Hong Kong and Singapore. And I know some of them, even they are maybe 50 years ago, but they are retired because they earn a lot, so they are retired. And we try to find them and ask some of them whether you want to do you have any interest to provide training program, to design the training program here in TABF, and they are happy to do that. Okay, so now we have designed some cases. And those cases is designed for those talent who have experience in Hong Kong and Singapore. And we also provide new courses that in the past, our bankers, they tend to sell products for clients. But now when we're talking about asset management, we need to provide services. So from selling products to provide services is quite different. So like I think by December, we will have the new courses that we have for each student. We will have 2 teachers. One is to play clients, and the other is to observe the students' answers. And here, like we have TABF, we have the photo studio, and we will record the whole process. And we, when our students face different cases, what is your answer? Do your answer satisfy the international standards? Do you miss something? And using AI, we also can analyze what's missed in their answering process. So that is a new approach we do. But I have to say, in the beginning, we use those cases in Mandarin. But in the near future, we hope our next generation, because the first approach of our government is to try to have a good management of the wealth for our Taiwanese people. But in the next stage, we have to open the door, and we will invite more international company here. So our local talent, they also have to use English as a tool. We hope which will come very fast in the near future. In the near future. So that is the practical strategy now we use, and we also have the long-term view.
Fantastic. Well, I must say it's been interesting for me to be here during Taiwan Week, and particularly to participate in the fintech. There's no question about the internationalization. We've had people coming from the Americas, from Europe, Germany, the UK. We've had people coming from Vietnam, Singapore, Hong Kong. And I think what's also interesting is, of course, been the returning Taiwanese who clearly, there's nothing better than the people who've left coming back, realizing that there are real opportunities back at home. So that is excellent to hear. So I don't do it. Now, Chris, I'm also interested because you're running a family office, and we saw here that 50% of the IPO market is tech. And clearly, globally, what we've been seeing has been the merger really of tech and finance getting tighter and tighter and tighter. Somebody said yesterday, 2 puzzle pieces kind of moving closer together, which I thought was quite a good analogy. And Taiwan has a rich story. So we've got obviously a very clear semiconductor industry, but as Dr. Cao pointed out, there are a lot of other areas of tech here in Taiwan. How should infrastructure, energy, sustainability be considered as part of this investment story? And how do we go about leveraging the fact that there is a very large semiconductor industry here as well?
Well, Taiwan is both a consumer of energy, given its important tech and AI industries, but it's also a supplier in terms of not just the energy supply, of course, which they need, but also to the companies that handle parts of the supply chain, whether it's to make devices that reduce energy usage and so on and so forth. So in many ways, I think that this infrastructure, energy, and sustainability goals that a lot of countries are trying to achieve, especially as they're coming with more AI servers online, which consume a lot of energy, is that it's part of the investment story because a lot of the firms are not just making the servers, they're making the components and the other applications which make those servers consume less energy. And that's not just a story for Taiwan, then it's a story for all markets and all industries. And therefore, like I say, if I was an investor, I'd want to be involved in that because then you're being able to be working with the companies, investing in companies that are creating those applications, those types of technologies.
Fantastic. You know, one of the things I'm finding intriguing here and listening to this story is I alluded to it earlier, the way in which the regulatory system is working quite well with the financial services industry and industry in general. But you know, there's a temptation sometimes for governments to believe it's all about their incentives, and there's also a temptation to sort of say let industry get on with it. Somewhere in the middle is that kind of Goldilocks spot that everybody's looking for. So, you know, in your opinion, Phil, you know, what role should government incentives play? You know, tax benefits, infrastructure, versus just letting it get on with itself. And if I could tack on to that, what do you think are the regulatory reforms that are most critical to attract international asset managers, particularly when you're competing with Singapore, Seoul, Tokyo, Hong Kong?
Yeah, thank you very much for the excellent question. I would like to point two perspectives of my observation. First is regulators' attitude. You know what, that I has been in banking area for 10 years. Then I traced my journey to as a regulator. When I was in banking industry, the most important thing that I worry to dialogue with the regulator is the policies, whether the policy is consistency and whether the methodology is predictable. So I think the regulatory framework right now, we are very cautious and encourage the regulator. We have more transparent and more flexible. So we set up a platform to have a dialogue with our financial institution. And the second is the relationship between regulators and our industries. So in response to this risk associated with a new trial business, as an example, the Financial Supervisory Commission, we have worked closely with all stakeholders. We set up a workshop on with the public-private partnership. So we have already set up 3 dedicated workshops on private banking, family office, and OBU wealth management to foster best practice and market discipline. So through ongoing dialogue with industry, we ensure that our rules and are transparent, practice, and align with a global market practice. So this stands for relevant timely testimony to the major change in our regulatory response to the fast changing in financial environment with our unwavering commitment to financial stability.
Thank you. Thank you. One of the things that has been coming across this week and alluded to is when you examine Taiwan's economy from abroad, if you're not a serious investor, you tend to look at very large semiconductor manufacturing companies. But actually, the economy here is dominated by a lot of SMEs. And as was said, not exactly SMEs that aren't sitting on a lot of cash. They're also going through a generational transfer. And equally, they are expanding abroad as they realize that the local market for manufacturing is pushing them into OEM, OED arrangements. So there's a lot of international opportunity for co-investment, for example. What challenges does that create, in your opinion, Dr. Cao, for scaling, accessing capital, and transitioning to this next generation of ownership? How can overseas investors get involved in that?
Okay. Very difficult question, but I try to answer this. Yes, right now, when our bankers, they see the market opportunity, there are 2 kind of group. One group is that you mentioned, maybe they are 70, even 80, and they need to transfer their wealth to the next generation. The other group is that, especially from AI sector, they are maybe 50 years old or even 40 years old. And so those generation, they also accumulate a lot of wealth. Yeah, like TSMC now, one company can contribute like 40% of the total market capital. So you see that their wage and their stock market value is very quite surprising, but they are young. So when we see those two kind of group, I think of course, one group, the first group is that our policy targeting that our banks should have provide services for those older generation to have a suitable plans for their money wealth transfer to the next generation, and also this will involve tax, this will involve design, design, and for the second generation, maybe for the second group, their demand is quite different because now, for example, they actually are young. So our services is to provide like, and I know many Taiwanese for those family, maybe they have their the plan for their next generation to have education abroad. So in this case, how to design a financial product to ensure that their plan is workable is another another services. And also, so I think to satisfy different group demand is the challenge. But I have to say the most difficulty challenge is related to talent. Because now with TABF, we also provide recruiting services for our banks. And challenge is now, although the wage in banking sector is not low, actually it is relatively high compared to the average. But young generation, they think working in the bank is not interesting. So that is another challenge we have to overcome. They think wage is not the most important factor. So now our banks have to design work. I think using AI may have provide more interesting working environment for our young talent. I hope so. I think it must be changed. Otherwise, we cannot find enough new talent to come into in this industry. So I think that is another major challenge. And for your question just mentioned, I think we have to focus different group. Yes, thank you.
Well, I think there's no better sign of the modernity of Taiwanese youth than that they are making the same demands that we see elsewhere. So that's excellent. Chris, kind of a final question, if I might, for you, because we're sitting here in Taipei and saying the waters are fine, but you've come over, you've made a very serious commitment. And I wouldn't say it's the elephant in the room, but it might be a good-sized pony. How does the political uncertainty around Taiwan affect institutional investors' willingness to allocate funds to asset managers? And any thoughts on how you would, I wouldn't say mitigate those concerns, but how you would assess them?
Well, first, thanks very much. It is a good question that has to be addressed. Geopolitics affects every market these days. We know that Taiwan is not an exception in that way. At the same time, Taiwan's tech markets and other industries are just too important now for any investor to ignore. So therefore, Taiwan's created an important asset management center as a platform to attract asset managers, and the government get involved to make it attractive, even more attractive to be here. I think the solution is that Taiwan's working with more financial centers globally, as well as those centers and the world assisting Taiwan to enter, let's say, international financial organizations like the IMF to help further attract investors to work with Taiwan's asset management industry. There's definitely the industries here, there's the technology, the talent. I think as long as they have the backstops and the kind of the platforms that will help investors come here, I think that they're going to come because there's just too much that can no longer be ignored in terms of technology and other industries. So for us, it's always been the fact that geopolitics are everywhere, especially now. But like I said, the main thing is that the real story of Taiwan, the economy, the people, the industries, They're just too important. And they also provide actually very, I'd say, low risk ways of getting involved.
Great. Well, I couldn't agree more. Geopolitics is everywhere, and I could make similar observations. It's just that Taiwan is often in the news for that. Well, look, I think this has been fantastic. Really, I do. Phil, Yi-Cheng, Chris, you've made a case, and I think what I've picked up here is, you've got a regulator who's committed to helping, is predictable, and is really being pragmatic. We've got people here who realize that talent needs to be nurtured and grown, and are working very hard on the skill base. I think it's all in the title, Taiwan Academy for Banking and Finance. I think, though, the other interesting thing is open to outside talent and firms coming in to the market. So a very balanced view there. And then, I think all of us see the future as tech. Tech is going to be a major part of it. And this is an enormous, under-recognized in many cases, tech sector. And Chris has said, come on in, the water is fine. I guess my assessment is you're looking here at a successful, hardworking country that has grown its talent base and its skills, and that has grown with very few natural advantages to become really a tech dynamo. It's also very wealthy, and it's now about to extend those networks around the world. And I think the opportunity here for international overseas investors is to join them on that journey and help them make those connections. And a lot of that will be done through the Asset Management Center here in Taipei. So it's been fantastic. I wish that all of my work abroad with 120 cities that we evaluate, of getting in on the ground, but it's been a true delight to be in on the ground this week in Taipei. And I thank all of you for your hospitality, your warmth, your good food. And Chris, I wish you were here to join us for it. Thank you all.
Thank you so much. Thank you.
Thank you.
Thank you. Thank you very much.
Bye.